Guys, welcome back to my channel. So today we are back testing this particular strategy right here. Let me show you what we are looking for. All right, what we are actually looking for is a very I don't even know what this pattern is called, but I've been following it for a while, and I've been seeing that it works marvelously. So that is what I want to introduce to you today. So the particular pattern is this one right here. Let me draw it. Let me draw a rectangle around it. This, you see this candle right there, followed by that one, followed by that one. These three candles right there. You have your first, let's say you're buying, right? If you're buying and the direction agrees with you, in terms of direction and confirmation on how we are going to confirm the direction is from the weekly chart and using three moving averages. That is, I'll still show you which ones. But the basic pattern that we are looking at is this particular pattern right here. We have this red candle, green candle, and red candle, and green candle. So what we are looking at is uh, a sign that the bulls are in the market, where the bears have really tried to push down, they lost power, and the bulls have taken the market. So this is shown by having the red candle below the closure of the final green candle, and the green candle in between the two having it being smaller than this one. You can have several variations or several combination of that. Let me show you what I mean. By several combination, I mean something like this. I think I saw one right here, but I couldn't really tell you until we, all right, this one right there. So you can have this where you have this green candle not bigger than this one. You have another one which closes just in that end, but you have another one closing that is now above it. So now this is also the same pattern. What we are basically looking for is something like this. Have the bulls, the bears pushing down, have the bulls act like they want to take over, but they are not quite capable of doing it. Have now the bulls again push above it. This is what we are looking at. Okay. Okay, let me just. So this is what we are actually looking for. Something like this. The bears trying to push, bulls not having so much energy, and now finally pushing above it, above this closure of the lid, closure of the bears, and now pushing above. Where now the entry will be, let me just delete that one and start drawing. I hope you bear with me. Let's first clear this and that so you can clearly see what I mean. So let's draw this. I want to draw it. Should be somewhere here. Text. We don't have it. Why is the drawing part of it? Okay. Should be somewhere here. Well, I can't see it. Oh, here you are. Not the highlighter, but the brush. Okay. So this is what I'm looking for. I'm looking for bears. Let's say this is red. You can color it for you to see what I mean. Good. Then we have maybe wicks pointing up. What we are actually caring about is the body of the candles, right? So now we have another candle, which now is the bulls. We can have candles as much as they want, but candles are very important. I'll tell you why. And now we have the final candle where we have that. If you do get that, that is a complete signal for us to buy. Now, where is the entry and where is the stop? So this is the entry, this area right there. And it would help a lot if this was a major level, right? If it was a major level, that would be quite nice. And we have our stops below right there, below the week. That is the most important part. Below the week. So if this is the week right there, you have your stop losses now somewhere here. You can measure with your own mind, like let it be out of person. You can continuously test different variation. This is your entry. So as for the exit, you all know you need something like um, the 1:3, this to rod ratio. That is, you will measure this, and once you have this measurement, you will basically multiply it by 1:3. All right. Okay. Another thing is where I like to add to my position. So what I'm actually doing these days is having a 70% on the position at the first entry. When you have the first entry with 70%, what you are looking at again is a 20% or the rest 30% right here. You see the closure of this red candle where we closed and opened the green candle. This will be where you put now your 30%. This ensures that you get something like 1:4 out of your position most of the time, because this 30% easily becomes 1:1 once you get to your TP, right? And that is basically all what we are going to be looking at. Now, stick around if you like that to continue now to, let's see now, us back testing and basically look at what we are going to see, right? All right. So we can go back now to this Gojara, the Go Chatting. I like the Go Chatting platform because we can be able to um, play back even using um, the H4 chat, which is not possible on the TradingView platform, right? Now let's look at GBP JPY. So first of all, we need to go to the replay button. We mark where we want to start, then we can literally reset the chart. So what we'll be looking for is now entries. And don't forget, we are basically zooming out to understand the direction and the levels that are actually nearby, so that you don't, you know, doesn't get you by surprise. Okay. So we are currently at a level. Um, this is another level right there, and we can also mark this level right there. Now we can continue to play back and actually see what happens, right? Let's remove this and actually continue back testing. So by playing it, it kind of plays as if it was live, which is nice. So looks like we didn't have an entry at all. As you can see, um, we did have the formation somewhere here, but well, it didn't actually got close to our entry, but we really didn't enter. So yeah, we continue watching it. These are the kind of trades that, yes, you might not be getting them, but you got to accept when you don't get an entry, you don't have an entry, right? So I think we have an entry here. Excuse me, guys. I think we have an entry here, as you can see, a very good entry. We have this closure like we wanted. We have the red candle, green candle, and the green candle. So like we said, we have our entries right there. That is where we're going to have our entries with the 70 position, 70, you know, size. I would like to put my stop loss below like another level, like I see right there. And and also have our second entry. I'm sorry, guys, it's a rainy season, so you know a little sickness is anticipated. So, do we have another level above it so that we can have it as our TPs? I hate the fact that we are on this could be also a monthly level, looking at the general scale. So you gotta be careful with the position. But since we have the entry and this is back testing, we can continue trying and see what happens. So, right, we can have our position at 1 is to 3. Let's see what happens. 1 is to 3 is somewhere there. And we also have this position right there. So let's see what happens. So by playing back, you can clearly see that the first entry has been entered. The second entry, not yet. Uh, this is another thing you need to realize, that even if it's the H4, yeah, there we get our second entry. I don't know if we got the stop loss. Let's see. We actually didn't get stopped out. Damn, that must have been close. Look at that. Look at that. That must have been really close. We also have this position right there. Let's see if we did get the stop loss. We get stopped out. Did we get stopped out on this particular position? Nope. So we can actually match this too. So if we do get stopped out, guys, don't worry. It's trading. This has to be. Uh, Such things are very normal when you're trading. So let's see, and you don't judge a trade before you close it. So we got stopped out on that particular trade, which is very okay. Now that's our first entry, right? Now we continue looking at it. Um, See if we can get the second entry now. Gotta be patient with it, guys. The best part is that you would not be looking at it alone. Um, this I could consider as another entry, because when you add up this, and that, uh, basically they cancel out. Looking at this and that, it's like our entry, but what we shall do is nothing until we get to break above this level right there. So we wait and we wait. Seems like we're pushing down. We may be retesting this level right there. Be keen, guys. Be very keen to notice an entry before it's too late, before the entry is far gone. Okay, looks like we are getting back on the trend. We still haven't gotten our entry. This will be happening a lot in live, guys. It will be happening a lot in live trading, so you have to be keen to actually notice an entry like this one. You have this and this cancel out. You have this and you have that. So our entry will be somewhere here. Let me tell you why I'm saying this cancel out. So when you're looking at the market, where is the drawing? Shape and text. Let's take the brush. So when you're looking at the market and you have this when you're looking at the market and you get this kind of, you have this as the red, you can call it as let's have this now as instead of coming back here to take it, let's have it as favorite. It has been added. So instead of having this Let me show you. uh, this will take a while, guys. This will take a while. So call that a red candle, and we have this now as the green candle, which is something of the same sort. So given this red and this is red, right? If you are to combine the two of them would basically be a doji candle, or basically nothing. It will be just like that with a basic wick pushing down. So this one, that's why I'm saying that this and this are the same. So having this and that is our entry, right? So we can continue. I don't know if the time is up or almost up. So this is what I'm saying. We have this and this being the same. This is a green candle, this is the green candle, and now we are above it. So our entry will be, this will take a while. Delete, delete. Hey, come on, delete it. Okay, there we go. So our entry will be here, our additions will be there, and our stop loss will be there. All right, so let's do that. So this is our entry, stop loss right there, and our second entry, risking the 30% right there, and our stop loss right there. You gotta accept to be stopped out, guys. You got to accept to be stopped out. This will be our target because it's already an established um it's already an established level. So we remove these lines so that we don't get confused and think they are levels, right? So now let's play and see what happens. So our first entry just got triggered. Let's see if our second entry will get triggered. That's why you enter with 70% of your position right there. So if you are to enter with 50%, you would find that this trade would move up without you having an entry, right? You see? And it was as simple as that. This was a very, very smart entry. Actually, this is a very good way to show you that no trading, uh, no trading, what do you call it? No trade strategy, no trading strategy is 100% good or has 100% win rate. Okay, you will find that you will get an entry which gets stopped out, and again get an entry which will get a TP. Okay, and which is okay with me, because once you look at the risk reward ratio, this is about 2.72. 2.72 times your initial stake of 0.7 puts you about zero point 0.7 times 2 point, what was it, 2.9, 2.8, do 2.8, that's 1.96, and you lost a 1%. You are basically still up by 0.98. If you had an account of $100,000, then basically you are up $960, which is nice. All right, which is nice. So that is it, guys. Don't forget to like, subscribe, and share, so that you don't miss out on this um, content, that is additional knowledge on how I am tackling the market. And I'll have an update soon. I'm looking to buy an FTMO challenge of $100,000. That would be about like 400 euros. If we change this to US dollar, it's about $522, which is not a lot, but still not so small. So I shall be updating you guys once we buy this prop farm and how we're going to manage it. So yeah, I think prop farms are the way to go now. So have a nice time and see you on the next one. Okay.